Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager for GDM with today's outlook. Starting briefly with the US dollar, it broached a record high versus its major peers after the Federal Reserve became the only developed nation central bank considering raising interest rate this year. The yen paired declines to 117.90 versus the US dollar as a slump in Japanese share prices spurred demand for haven assets. And of course, the Nikkei 2 to 5 stocks average tumbled 1.1%, the biggest drop in almost 2 weeks. Moving briefly to Australia, to eye over there, the Aussie dollar fell to 0.7836. This is the weakest since July 2009 as traders bet the country's central bank will cut rates at its meeting next week. We will monitor that for you and inform you prior. The U.S. currency gained versus the majority of its 16 major counterparts as the Fed maintained its pledge to be patient on the pace of future rate gains. Fed policymakers have kept their interest rate target in a range of 0 to 0.25% since December 2008. The change of an increase to at least 0.5% by Fed's December meeting was 66%. Futures data showed from 86% at the end of 2014. The data showed last year. The New Zealand's dollar slid to the lowest level in almost 4 years, extending a drop from Wednesday after the nation's Reserve Bank hinted it is prepared to lower interest rates. The Kiwi was little changed at 73.26 US cents after touching 72.97. This was the weakest since March 2011. The euro is little changed also versus the US dollar at 1.1270. It closed at 1.1614 on January 26, the lowest in data showing back to 2004. In the commodity sector, gold extended losses as investors weighed the outlook for higher U.S. rates after the Federal Reserve boosted its assessment of the economy and labor market, while acknowledging, of course, global risk. The price fell as much as 0.5% to $12.7827 an ounce and was at $12.8256 this morning. The Federal Open Market Committee after a meeting in Washington on Wednesday, described the economic expansion as, quote, solid, an improvement over the moderate performance it saw in December. And of course, it substituted strong for solid in its evaluation for job gains and said it will make it into account regarding on international developments as it decides how long to keep rates near zero. Let's take a look at oil. It traded near the lowest price in almost 6 years. After yesterday, government data showed U.S. crude stockpiles increased to the highest level since at least August 1982, adding to signs that a global glut will persist. Futures were little changed this morning after falling 3.9% on Wednesday. Crude inventories in the U.S., which is, as we know, the world's biggest oil consumer, expanded by 8.87 million barrels to 406.7 million last week, the Energy Information Administration reported one more time yesterday. And of course, the most important news for today in the economic calendar is the unemployment change for Germany in about an hour time and Japan's National Consumer Price Index close to midnight. That's all for me for today. Thanks a lot for being with us and good luck. Bye-bye.